What's up, my friends? So, welcome back to another week of the weekly market analysis. So, before we talk about the market analysis, alright, what I like to do each week is to, go through my inbox, identify the best question that got emailed to me, and I will share with you the question and I will give you the reply to the question as well. Because I think, this way we all can learn something from it. And, hopefully, you can, get an insight to something that you never had or learn a lesson that, could prevent you from making a mistake or something. So this week, I had an email from Lim. He dropped me an email and says that, Rainer, I bought some shares of Sembcorp Marine. So for those of you who are unaware, Sembcorp Marine is a shares that's trading on the SGX, alright? It basically is a company that builds oil rig. So Lim bought a few shares of some Sembcorp Marine, a few lots. And he bought it and he noticed that, price went against him. And what he did was he averaged into the shares, right? He averaged into his trades. Trades or investment, I do not know what kind of a perspective he had on it. So that's what he did. He averaged into the losers, and right now, he's having a paper loss of 35%. And he's asking me, Rainer, what should I do? Should I cut the loss and move on, or should I, pray and hope that price goes back in his favor? And this is my answer to Lim. First and foremost, right, this problem, I faced it personally. Years ago, right, I bought a share called Yang Zhejiang, right? I bought it at 179. And I went for a holiday in Krabi, right? When I landed on Krabi, the share price was currently trading about 135 to 140. And the day I left Krabi, it was trading about 110 to a dollar within that range. And I can tell you, during the 5 days in Krabi, it was a horrible feeling, right? I think I lost 25% of my share value during that 4 or 5 days. And after the holiday, I came out with this learning experience, and it's this, right? Whenever you put on a trade, whenever you put on an investment idea, you must always know when you're going to get out, right? It is not responsible as a trader or an investor to put on a trade or an investment, right? And not knowing what will happen, right? You just let the market decide, what's going to happen. Because, always bear in mind, there is always a possibility of a loss. And you don't want to lose everything just because of one trade. So you always have to know at which price you're going to get out and exit the trade or the investment. Whether it's a trader or investor, the same principle remains the same. So my reply to Lim is this, right? I'm not a financial advisor. I can't give you advice on what you should do. But if I were you, I would take the bitter medicine. I'll take the loss and I'll move on. But that aside, right, the main thing to take away from it is to learn from this valuable lesson. You want to learn that, in the markets, anything can happen to you. And you always want to have an exit price when you are wrong. Because the moment you do not know when you exit, the moment you start thinking about profits and nothing but profits, this is what's going to happen, all right? You are suffering, huge losses that could be prevented if you had known, at which price you exit your trades. So that is my answer to Lim. It is not an easy answer because, what could happen is that you exit your trade and then price goes in your favor. Maybe, making you in profits. And this is something that's so hard to accept, People feel very sour about it because, I sold it at a low and, and then price, goes in my favor, could have given me a profit. But trust me, that is not the point. That isn't the point. The point is this. The point is that when you put on a trade, you had no idea of when you're going to get out when you're wrong. And that itself is the problem, right? Because, this time round, maybe price could go in your favor, giving you profit. But what about the subsequent time when you do the same action? The next third trade, the fourth trade, the fifth trade? I can tell you it's a matter of time before, one slumps all the way down, wiping out all of your gains. It's a matter of time. So I would rather you to take these valuable lessons in the days ahead, do not repeat it, and that's the way we grow as a trader. So yep, that's a email I got from Lim, right? I hope you find it useful, right? This insight, and I don't want this to happen to you as well. So with that, right, back to this week's market analysis, right? We'll be talking about the New Zealand dollar, crude oil, gold, and yep, I'll see you there. Alrighty, so this is the chart of gold. So looking at the weekly chart of gold, let's look at it from a bigger perspective. And you see that gold basically broke down from a descending triangle. We have this lower highs, lower highs, lower highs, and lower highs coming into this multi-year support. So a few weeks back, what happened is that we got a break and close below the support. And currently, on the weekly chart, gold is showing, I would say, having two doji, right? Two inside bars. And basically it's telling you that it is consolidating. So again, no surprise because currently we are trading the month of August, right? It's a summer holidays. So what happened is that volatility during this period tends to be lower. So no surprise that we see price, just whipsawing in the days ahead. So looking at the daily chart, you can see clearly, right, that price just isn't going anywhere. But from a technical standpoint, what this is basically a bearish flag pattern. Right? It's potentially forming a bearish flag pattern. And what could potentially happen is that we see a follow through move towards the downside, because we know the trend is towards the downside, and usually flag pattern shows, or it's telling us that it is a continuation pattern and that there's a possibility of a further move towards the downside. So this is the daily chart of gold, something to bear in mind. And for me, I'm really short gold. So, I'm just watching to see, whether the move will be fueled further towards the downside, or whether it may reverse back towards the upside. So, this is something for you to watch as well. So up next, all right, let's talk about the New Zealand dollar. So this is the chart of New Zealand dollar. Looking at the weekly chart, you can see New Zealand dollar still, clearly very much in a downtrend, but notice that we had 3 weeks of higher prices. We had a false breakout this week, all right? Price basically took out the lows over here, but didn't fuel a further downside, and instead it closed higher for the week. So this is telling you that temporarily the bulls are in control, and the next level where they want to affect, all right, or where the next level that you should be watching out for is this resistance over here. So this area over here is where the bears will look to defend. It's a resistance area with confluence of the 20 and 50 period moving average dynamic resistance, all right? So you have this dynamic resistance over here coming into this classical horizontal resistance area as well. So that is an area to watch for traders, all right? For those of you who are more aggressive, what you can consider is going short the moment price comes into this area. For those who likes to wait for confirmation, a candlestick pattern to signal that the move may reverse towards the downside, what you'll look for is a typical candlestick pattern like a pin bar, a bearish pin bar looking like this, telling you that price has a possibility of reversing back lower. So these are a couple of scenarios that could occur. So just pay attention to the possibilities of what the market can offer. And last but not least, let's talk about crude oil. So crude oil over here. So looking at the chart of crude oil, let's look at a weekly chart. We get a bigger perspective. You see that crude oil, clearly the trend is picking up once again, right? You see that we had this strong parabolic move towards the downside, this strong sell-off without much retracement on the weekly chart. Then after which we had this a retracement, a very slight retracement. Then price traded lower, where the whole thing's you break out once more. But guess what? No, it didn't, right? It retested the lows, a false breakout, and then it did pretty much a strong rally towards the upside. This is followed by a consolidation over here for about, I think, 6 to 8 weeks. And right now we have the breakout below, and price is retesting back towards these lows once more. So for crude oil, on the weekly chart, right, clearly the bears are in control, coming back into this multi-year support where the bulls will definitely, they will see whether this area will hold, right? This is the bulls territory. This is an area whereby they will look to do business for those who are bullish on crude oil. So looking for trading opportunities, you can go down to the forward chart and you notice that the 20 and 50 period moving average over here is currently acting as dynamic resistance. So a possibility I see down here is price retracing higher, coming to this dynamic resistance. It's a potential opportunity for you to sell. And likewise, you can just sell into the level if you're more aggressive, or you'll wait for some sort of confirmation by candlestick pattern, like a pin bar and engulfing pattern, or a lower close. These are all some possibilities for you. So this is the area for you to take note of, right? The 20 and 50 period moving average acting as dynamic resistance. So yep, that's all I have for you in this week's market analysis. I hope you find it useful. So if there's anything, feel free to leave me your comments and I'll get back to you, right? With that, I wish you all good luck and good trading. I'll talk to you soon.